Welcome everybody to the 405 update. This is our one stock chart of the day that we're going to be talking about today. This is action directly off of our trading desk. I'm Brett Rosenthal. This is ARMR Investing. We're a virtual hedge fund experience. You join us on the desk, you become portfolio manager of your own assets, you're self-directing them, and you're going to be experiencing how we run capital as a hedge fund here, right? So day trade, swing trade, and invest. Today, we're going to talk about day trading and how to make money day trading the S&P on a down day, okay? We're going to go through how to make money day trading the S&P, and we're going to be using SPXL, which is triple the movement of the S&P ETF, okay? So how to make money day trading SPXL on a down day. I'm going to walk you through step by step how we do it. What you might want to do is grab a pen and a piece of paper, because I'm going to share some of the steps that anybody can do. We're going to talk about the triggers, why we got long today, where we got long today, how we booked a profit, the stops that we use. Everyone can do this. So grab a pen, piece of paper. You might want to write some of this down. If you find this helpful, as always, subscribe to the YouTube channel down here. You'll get these updates on a regular basis. Go ahead and share this channel, this video, all these things. If you think what we're talking about today has value for friends of yours. Okay, so let's dive in step by step how we run our trading desk today. And what you're going to see first, in fact, only, this is the chart we're going to share today. And that's a 3-minute bar chart of the S&P, SPY. Now, I know some guys on our desk are trading index options. They're trading SPY options off of these setups. You can do that. I don't. I like to trade SPXL. So I'm going to show you the underlying asset, SPY. And then when I get a long opportunity in SPY, what I'm buying is SPXL. Okay. So what you're looking at right here, a lot of lines on the screen. Let's go over it real quick. It's a 3-minute chart. You might want to write this down. 3-minute chart. So each bar is 3 minutes. I know a lot of people who use 1 minute. A lot of people use 15 or 5 or 10. 3-minute really works for us. We have an opening range of the first 15 minutes. The high and low is right in here. Okay, this green line here, red line here, opening range, high and low, the first 15 minutes. You want to jot that down. First 15 minutes sets up all of our trades on our desk. Okay. The next step of how we trade is we have different triggers. We have 5 day trading triggers to trade SPXL. You could day trade the S&P long on a down day using these 5 triggers. This is how we capture upside even on a down day in the market. This particular trigger is called the gap and go. Okay, and then we got 5. I'm going to focus on the gap and go today. It's such a powerful trigger. It even makes money on a big down day today, right? The market just sold off all day. We captured that small opportunity in the morning to make money because of the gap and go trigger. All of these are in the ARMR day trading playbook that we share with ARMR insiders, other portfolio managers on our virtual hedge fund desk. So step by step, while it's going on, I'm walking our subscribers and our portfolio managers through how we're trading this. So market opens on a gap up. That's how we know the play in our playbook is possibly a gap and go. All right. And think of the playbook just the way you would think of a football coach on the sidelines, got his playbook. The faster you figure out what the other team is going to execute on the field, the better you're going to be at making money in this case, or winning a football game in their case. Okay. So gap and goes the setup. It gaps up in the morning, sets up the first 15 minutes. And the go part is when the market price of SPY takes out the high of the first 15 minutes. That's when we execute and we get long SPXL, right? Because what we're doing is day trading SPXL. We're day trading SPXL capturing long upside even on a down day. This is how we do it. All right. So I'm going to blow this up for you right now so you can just see just this area where we were trading this morning. Market gaps up, sideways, breaks out of the opening range high, which happened to be 450. For those of you who are gamma enthusiasts, you understand that importance. Pops right above this level right here. We get long in that green box, right? These red lines are our stops. So the first stop is the low of the bar we buy. And this is something you might want to jot down, how to follow your stops up. The first stop is the low of the bar we buy. Then when it extends higher and gets to this yellow target, we book a partial profit. In fact, I can move this right on over here because that was the bar that hit it. So we booked a partial profit right there and we raise our stop to here. Okay, so first the stop is down at the low of the bar we bought. Then when the target's hit, we raise our stop to the low of the 3-bar sequence that extended to that target, right? Then the market goes higher again and we raise the stop one more time to the low of the bar that hit the target. We booked profit on the very next bar. So 3 minutes later, it hit our second target, which happened to be the ARMR moving average. Okay. So at this point, we'd already booked 50% of our gains on the trade with the stop raised to the low of this bar, the bar that hit the first target. Let the market trade. And then right there on that bar, we got out of the rest of our position, booking our gains on the day. Now, here's the key. Here's the key. When trading the S&P, these are smaller moves, right? So what we do I do in my personal day trading portfolio, all I do is trade the S&P, and all I do is put the capital in SPXL. It gives me 3 times the performance of the S&P. So if I put 100% of my portfolio there, I'm getting 300% upside, right? So 100% of my portfolio is there, 300% upside. That pop right there was able, because of that exposure, to give me meaningful profits today. Even before the market cratered, we had no overnight risk because we're just day trading, so it goes back to cash every night, right? We had no overnight risk, but captured on that pop all of the market move in the morning because we were doing 3 times the market movement, okay? So on that pop, all of a sudden, we had the same return as the market, which was up about 1% at that point on the morning without any overnight risk. That's the point of day trading the S&P and using the triples to do it. So we captured that gain, then the market cratered, right? And so the stop information is key. There were no other trades for us the rest of the day. Once our stop gets hit right in here, actually that yellow bar, it tells us that the impulse trade we just captured is over. And then the market just sells off all day. And there was no opportunities the rest of the day. And I can tell you at some other time what this yellow box means. It's fairly important. But I digress. I don't have that time right now. I hope you all found this helpful. We'll be back doing these videos periodically, as all we do is day trade the S&P on the long side using SPXL. And so what we're looking to do is capture alpha, harvest alpha every day. Market closes flat or down in the day, and we're up 0.5%, 1%. That's what we're trying to do, back to cash. So on a risk-adjusted basis, we have no overnight risk, right? So that's what we're doing with our day trading portfolio. I look forward to seeing you all on the desk. If you found this helpful, hey, go ahead and subscribe to this channel. You can always subscribe to ARMRinvesting.com, ARMR Investing.com. And I look forward to working with all of you. Have a great night, guys.